Welcome, accounting boffins. You with Ashraf Patel and the crew. And our topic for discussion today is asset disposal. Yes, I can already see the reaction on some of your faces to saying, no, we find it too difficult. Guys, this is one section. Once you master it, once you follow a certain procedure, and once you understand the concepts behind it, I promise you guys, it will be a piece of cake. Chocolate cake. So you know my favorite now. Okay, so when dealing with asset disposal, what do we deal with? What are the processes that are affected when a business sells fixed assets? Obviously, remember something, a business buys or acquires assets not with the intention of selling it. The asset was acquired with the pure intention of using it. But obviously, when it outlives its useful ability, or because of technological advancements, it becomes necessary to sell old assets. And that's what we refer to as asset disposal. So you can see there are processes in place that needs to be followed before we can dispose of an asset. So now, once again, let's look at our concept map. We know, look at the methods of depreciation. By now, you should be au fait, you should be actually screaming out the answers. Remember, one is the cost price method, and the other is your reducing balance method, or diminishing balance method, or carrying value. So look at the question, and it will indicate to you as to what method of depreciation is being used. Now, when it comes to asset disposal, clearly, there are certain steps to follow, right? And that's what we're going to be doing right now. Why will a business dispose of an asset? One, we said, the existing equipment has become old. The vehicles may have been involved in an accident. It's possible, right? And as a result, it now has to be disposed of. That means we can't keep it anymore. That is the reason why a business will dispose of the fixed asset. One, think of another one. A business will dispose of the fixed asset because there's damage to the asset and therefore the business cannot use it anymore. Another important one, the asset is out of date, meaning it's outdated. It cannot be used anymore. For a business to remain competitive, it needs to have the latest assets so then it can compete in the market. Now, when we are disposing of an asset, right, it is important to remember that we can, one, sell the asset for cash. Immediately you know you're dealing with a bank account. Why? Because money is coming into the business, right? If we sell the asset on credit, it means that we've sold the asset to a debtor. Therefore, you have debtor's control coming in. I'm just showing you the various ways in which we can sell the asset. Number three, if the owner decides that they're going to take it for personal use, immediately you know. What do you know? The acronym is POP. What do we mean by POP? When you see the words personal, owner, or private, immediately you link it to your drawings, right? Clearly you can see that is also a possibility where the owner takes the asset for personal use. Or the asset could be given as a donation. Then clearly you're donating it to an indigent school or to somebody that needs it, an orphanage or wherever else, and therefore that will be seen as a donation. Another way we can dispose of an asset is when the vehicle is traded in, right, for a new one. Now remember, like we said, the vehicle has been used, it's now served its purpose, it's now old, we then trade it in. A trade-in basically means the following. You're actually selling that vehicle to the motor dealer. and buying another one in its place. That's what we mean by a trade-in. And obviously, the contra there is creditor's control. The assets can be damaged and an insurance claim can be lodged, or the asset can be scrapped, meaning it can't be used any longer and it now has to be scrapped. So those are ways of disposing of an asset. Okay, now what steps do we follow? Now this is important. We start off by saying, number one, calculate your depreciation for the current period. That means if you're disposing of an asset sometime during the financial year, so here we go. If your year started in January, on the 1st of January, and it ends on the 31st of December, clearly you can see, if we say we sold the asset on the 30th of June, right? So what have you done? You've used the asset pro rata. What do we mean by pro rata? You've used the asset for 6 months, from January to June. This means when you are calculating your depreciation now for the 6 months, you'll say amount, rate, and time the time component will be 6/12 because that is the amount of time that you have used the asset in this financial year. What's my entry? A debit to depreciation and a credit to accumulated depreciation. Analysis once again, debit depreciation, imputed expense, credit accumulated depreciation, it's a negative asset increasing in value, therefore debited. So step number one, depreciation. Number two, the cost price. What are you going to do with the cost price of the asset? You're going to remove the cost price from the asset account into another account. Here we go. Transfer the cost price of the asset. You debit an account called asset disposal, right? The account is called asset disposal, right? And we're going to debit that account. Why? Because we're removing the asset from where? From the asset account. In other words, look at this here. Here we go. There's the asset, there's the account, let's say it's vehicles. So you're debiting asset disposal and you're crediting the vehicles account. What have you done? You're removing the asset from the vehicles account and transferring it into an asset disposal account. Okay. So that's the removal of the cost price. Now, the third step is the accumulated depreciation. Now, very important. Calculate the total accumulated depreciation at the date of disposal. What is that? It's your balance at the beginning of the year plus your depreciation up to the date of sale as you calculated in the previous example. Remember we said here, where you calculated, we said, where we go? Let's go back. Here we go. This depreciation that we calculated here, this one here, that will be added to your balance at the beginning of the year, and the total amount will then be taken out of your accumulated depreciation account. So in other words, this is what you're looking at. You're looking at, here's the two accounts again. What we said was, it's your accumulated depreciation account and your asset disposal account, right? So what we're saying, a debit to accumulated depreciation, you're going to take it out of here and you're going to transfer it into your asset disposal. What amount are you transferring? The total amount. And what is the total? Your balance at the beginning of the year plus the depreciation for the current, the pro rata depreciation for the financial year. So once again, what's your double entry? A debit to accumulated depreciation. What are we doing? Why are we debiting accumulated depreciation? We're removing the accumulated depreciation. Watch, you're taking it out of that account and transferring it where? To asset disposal. Notice something is happening here. What is happening? You're transferring all the information regarding the asset that you're disposing of to an account called asset disposal. Right. Now I'm going to tell you something very interesting. What type of an account is asset disposal? Have you ever thought about it? Asset disposal is what we refer to as an interim nominal account. I repeat, it's an interim nominal account. What do we mean by interim? It's set up for a specific purpose to transfer all the information of the asset into the asset disposal account. Once you have transferred all the information, it serves a particular purpose, and then, yes, it self-destructs. You'll notice that it closes off and you'll end off with either a profit or a loss on sale of asset. You want to know more? Stay with us. You'll see exactly what I'm talking about. Okay, so this was step number 2. We had step number 3 actually. We did the depreciation, which was number 1. Number 2, we did the cost price, the transfer into the asset disposal account. And number 3, we transferred the accumulated depreciation. Okay, so my double entry once again, debit accumulated depreciation, credit the asset disposal. So in other words, if you're looking at your asset disposal, you find now that you've got 2 components in your asset disposal. You've got the cost price and the accumulated depreciation. Right. Now, if you sold the asset for cash, very simple. You debit bank, credit the asset disposal. Simple. Bank is an asset increasing in value, therefore debited, credit your asset disposal. Why? There's money coming into our account, and for what was it? It was for the asset. Notice that the entry for the disposal has nothing to do with the vehicle's account. Why not? Because the asset, or whatever asset, it may be equipment, is no longer in the asset account. It's now in the asset disposal account. Therefore, your credit in asset disposal. Next one, if you sold the asset on credit, remember we said the different ways, you'll debit debtors control, the credit remains constant. Yes, you're going to credit your asset disposal. Exactly the same as the previous one, a credit to asset disposal. Now the third way of disposing of an asset is if the owner took it, debit drawings. But the credit is constant, guys, and that's what I want you to see. That no matter how you dispose of an asset, you will always credit the asset disposal account. The detail will change depending on how you disposed of the asset. Then we looked at donations, a debit to donations. Why? It's an expense. Debit donations, credit your asset disposal account. Once again, no change. So no matter how you sell or dispose of the asset, you will always credit your asset disposal. If you trade it in this vehicle on a new vehicle, you'll debit creditors control. Let me explain this one to you so you can see why you're doing this to creditors control. So here's your creditors control. You bought an asset, a new one, for, let's say, 200,000. Okay? Now, if you're selling your old vehicle for 50,000 Rand to the dealer, watch, you debit your creditors control. Why are you debiting creditors control? Because you don't owe the dealer 200,000 anymore. You owe them 200,000 less the 50,000. And there we go. My credit entry in the asset disposal account of 50,000 Rand. So what was that? That was the trade-in. If perchance the vehicle was insured, the insurance company have accepted the claim but haven't paid us as yet, you debit an account called insurance claim, right? It's an asset account. It's like a debtor. They're owing us the money. Debit insurance claim, credit asset disposal. So clearly you can see from what we have done here, I've shown you all the different ways in which we can dispose of the asset. A quick recap: if you sell for cash, debit bank, credit asset disposal. If you sell on credit, debit debtors control, credit asset disposal. If the owner took it, debit drawings, credit asset disposal. See the common entry, a credit to asset disposal. Donated it, debit donations, credit asset disposal. If it was an insurance claim, debit insurance claim, credit asset disposal. And a trade-in, a debit to the creditor's control and a credit to asset disposal. So no matter how you dispose of the asset, you will always credit the asset disposal account. It's a debit entry that will change depending on how we dispose of the asset. I'm sure I've piqued your interest on asset disposal. You want to know more? Stay with us. See you just now.